Now, I don't think it's any secret that inflation has continued to cause a lot of financial pain, but it may have an upside actually next year. In 2023, the IRS is adjusting tax brackets, standard deductions, retirement contribution levels, and gifting levels. And for the first time in 20 years, they are adjusting the required minimum distribution tables for those taking money out of their IRAs. So something to look forward to for next year. Nolan, what are all the 2023 retirement rule changes?
Well, there definitely are a lot of rules that are already in effect, and there's still a couple of rules that are pending before the end of the year. So we'll see how the year wraps up. The bottom line is just remember the Honorable Learned Hand. He said there's two systems of taxation, one for the informed and one for the uninformed. And so you really need to know what the 2023 retirement rule changes are and know how to apply those to your unique individual situation. You know, if you think about how many rules that you didn't know existed until you're after the fact. You're like, man, I wish I would have known that.
Yep.
This is where you need to dedicate a little bit of time, have that 1 hour meeting, with a professional that understands what those retirement rule changes are and then how they can apply to your situation. A perfect example is here towards the end of the year, a lot of people are finalizing what is called their required minimum distributions. And these are the folks that show up to church on Sunday and they donate and they do their normal tithes. They might help an organization around town that they're philanthropic about by writing checks out. But what they didn't realize is that years ago there was a rule change that allows you to donate money directly from your retirement account for your required minimum distribution, and by doing so can lower your taxes as well as increase the amount of money that goes onto the charity because they don't have to pay taxes on it as well. So when we're looking at it, life expectancies are changing next year. So the life expectancies are going from age 82.4 to 84.6. That's used to calculate those required minimum distributions from IRAs, 401ks, or other retirement vehicles for folks that are age 72 or older. And as a result, RMDs might be a little bit less than the previous formula, which had been in place since the year 2002. Also, with smaller required withdrawals each year, more of your retirement account can remain inside of that IRA, 401k, or tax-deferred retirement account. The IRS is also going to increase some of the limits you can contribute to a 401k. That's going up from $20,500 to $22,500. The 401k catch-up is going from $6,500 to $7,500. The Roth and traditional IRA are going up from $6,000 to $6,500, and the gifting is also going to increase next year from $16,000 to $17,000. So there's a lot of things that are coming down the pipelines. The best thing to do is to have a meeting set up. Today we just talked a little bit about some of those changes that are occurring on the financial side, but those changes are also occurring on the healthcare side. So if you haven't made a decision on what to do with your health insurance plan for 2023, I'd encourage you also get a hold of our office, schedule a time to meet with Scott. He can take a look at those. And if you want to know about the other rule changes on how they apply to your retirement account, I'd love an opportunity to sit down and have a conversation with you, and we can take a look at your unique situation. And just remember, as I said, there's two systems of taxation. It's one for the informed and one for the uninformed. These are the rules, and these are rules that you can apply to your situation. They're there. You just got to know how to take advantage of them and put them into your own personal situation.
And again, if you just go with the default rules, it typically benefits, he who makes the rules. And in this case, it would be the government. They're not certainly going to turn down you giving them a little extra money because you don't know what could work for you. But it's to your advantage, I think, to have this conversation. So again, the phone number, 419-794-3030. One last time, 419-794-3030. You can always find them online, Americasretirementheadquarters.com. You can find out previous editions, segments of the show on YouTube, on Spotify, Apple Podcasts. Just search for America's Retirement Headquarters and catch up there. And we appreciate you joining us this week. Thanks so much for spending part of your week with us. Please have a great week. Have a safe week. Nolan, as always, we appreciate you taking the time. And as we wrap up, I want to leave you with the final word.
Yeah, always love educating our listeners. We always appreciate you tuning in. Down here, holding the fort down as Scott is busy meeting with people, talking about the health insurance options as we kind of go through the end of the year planning process. But also at the same time, we spend a lot of the time talking at the beginning of the show how to avoid getting hurt in the market, staying out of the herd. The herd mentality is a dangerous thing to do. make sure to go to YouTube, check out some of our past shows. And the thought for this week is it's easy to stand with the crowd. It takes courage to stand alone. Folks, I want to give you courage to take some actions, do something about it, and make a difference. Stand up. That's how you'll really stand out in this type of market. And just remember that America's Retirement Headquarters is always here to help you, whether it's preparing for retirement or moving through retirement. Just remember, when you think retirement, think America's Retirement Headquarters.